Hi, this has been Reppond. Welcome to my YouTube broadcast. Today is November the 6th, 2024. This is the day after the election. So I can't tell you, okay, be sure to go out and vote because that's already passed. So now we're in the season of post-election. Uh, Given that it is before we have any results, we don't know where this is going to land. The question in a lot of people's minds is what is the impact on the market? Maybe what's the impact on the economy? But certainly, I talk to a lot of people that are concerned about where is this, what's going to happen with the stock market if, Harris gets elected or Trump gets elected, depending on what side they're on. And so we don't know. And that's the real answer is we don't know. And but I suspect either initially or some point in the next month or two, there is going to be a reaction, positive or negative, depending on who gets elected. So I am careful. I don't really invest that way. I don't. I find that geopolitical events don't really affect the market very much, or if they do, it quickly recovers. So if it goes down, it quickly recovers. And lots of examples. I've gone back and looked at history, and a lot of people think that, oh, it's going to have a terrible effect on the economy if this happens, if that happens. Doesn't seem to be that way. It's I can't recall a time where it's been that way. So my 2 cents worth, but here we are a day after the election. So hopefully you're doing okay and you've got a plan B. If things go south, really go south, which they will at some point, that you've got some kind of a plan B that you believe in. And so I'll leave it at that. So now I'm going to go into the dashboards and comment on those. Okay, this is as of last Friday, November the 1st, 2024. Um, as you can see in the yellow box, nearly everything was negative. The small cap eked out a tiny gain. Let's just say it broke even. Everything else was down. Um, and the pink box shows you the results year to date. Starting with the S&P up 20%, the Nasdaq 100 up 19%, Dow 11, etc., and they go on down from there. What's interesting to me is that bond yields are up quite a bit. I covered this in yesterday's video. And the TLT at the bottom is the 20-year government bond ETF. And for the week, it was down 1.41%, and year to date is down 8% and is negative on all four time periods on the right, four red dots over the 20-day moving average, the 50, the 100, the 200, all negative. And the developed markets, EFA, right above that is down three out of four of those, and is only positive 5% year to date. So the U.S. market is doing well relative to other markets. The emerging markets up 10% for the year, down 1%, 1.4% for the month, below two of its moving averages. Not doing great, but the U.S. markets are doing well, and I think a lot of that has to do with the Magnificent Seven or those that are heavily invested in AI type stocks. The S&P 500 breaks down into 11 sectors, types, parts of the market, and they all in the yellow box. Everything is negative except for two of them are barely positive, the financials and the telecommunication sector, but everything else is negative. Year to date, financials are on top, and uh, industrials, technology, telecommunication, etc. They go all the way down. And all of them, including the last one, which is retail, which is up 4%, all of them are positive. But when you look at the red dots, green dots, you look at the last well, I don't know, the bottom half of that page, and there's a lot of them below uh, two or three or four of those moving averages. So it's not a positive picture. It's kind of turned more negative. And there are 24 out of 28 that are green, and the rest of them, about would mean about 44 of them are negative. The S&P 500, this is the chart, the line chart. It's a weekly chart showing a one move equals 1 week. It's a 30-month chart, so over that's 2.5 years. So you can see that the, I just put a black arrow on there so you can see they're still above the 20 period moving average, but over time moving up. And then in the last couple of weeks, you see the downward draft in it. I don't know that that's necessarily a trend that it's going to break below that because it does go up and down. When I put that on a candlestick chart, same thing, except you get the benefit of candlestick. So most of the movement in the S&P 500 in the last 2.5 years, most of it are hollow candlesticks, not red. Red means it started up and went down. And so the majority of them are not red. So, but the last, as you can see at the very end, the very far right, the last couple of weeks have definitely been negative. Okay, this compares in a relative value standpoint the Nasdaq 100 numerator, S&P 500 denominator, and you can see the direction. When it goes up, that favors the Nasdaq 100, and when it goes down, it favors the S&P 500. So again, over a 2.5 year period of time, you can see the general direction, but in the last few months, it definitely has had a downward decline and is below its 20 period moving average. Growth versus value. The growth, um, SPYG is the growth ETF, and the SPYV is the value ETF. And when it goes up, it favors growth. Goes down, it favors value. Again, over time, they have moved up, as you can see from the black arrow. But in the last few months, again, same picture. Uh, they're down more than up. And the S&P 500 large cap companies compared to small cap IWM. Again, it's kind of the same picture. It's above its 20 period moving average, but again, moving up in an intermediate term period, and in the short term in the past few months, it's down. Long term government bond using TLT as the ETF. Uh, Again, you can see, and I've commented on this, how negative the this has been for the past, I don't know, several weeks. You see that downdraft at the very end going down. This means that bond yields are going up and um, bond prices are going down, hurting traditional 60/40 buy and hold stock and bond portfolios. The US dollar continues to rally, goes up, and again, you see over time, but you also see that last month or so definitely moving back up well above its 20 period moving average. Gold is on a tear. I mean, it's moving up nicely, uh, and I'll cover that more later, but definitely positive for gold. Silver, more volatile than gold. It's again up, but it is down for the week and it just again has more volatility. Bitcoin has been up, and that you can see where that's going. Very positive above the 20 period moving average and moving in an upward direction. Volatility index, the VIX, is look at where it's going. I drew a kind of a trend line on the black arrow to show where it's going, and I put my marker at 24. We'll see if it gets above that and breaks into higher territory, which means that's bad for equities. Asbury 6, all 6 of their indicators are negative. Asbury's cross-asset relative performance, uh, none of them of the top section in equities are strong enough one over the other. But in the bonds, government bonds are stronger than corporate bonds. As bad as they are, it's, I guess, the least worst is the way to say it. High yield is better than high quality, and short term is better than long term in the last month, or the week, the last month, the last quarter. US versus the world. Now, this is interesting. So we have one country that is stronger than the US, and that's Taiwan in the last week, the last month, the last quarter. The US is stronger than some, but not very many. So Chile, Brazil, Mexico, South Korea. That's it. So again, mixed picture. And I thought I would show you this. This is US versus South Korea, SPY versus EWY, the stock market in South Korea, not the economy, not the currency. And you can see where it's going. Again, it stayed above its 20 period moving average for quite a while and seems to be moving upward. Gold and silver. Okay, this is as of last Friday. Gold down 3.3%, silver down 0.4%. The price of gold is 27.37 per spot and silver 32.45. The gold silver ratio is 84 to 1. A monster box, 500 generic silver will set you back 16,905. That includes $1.36 per ounce over spot markup, and that brings the price up to $33.81 per round when bought that way. Okay, if you have questions or comments, leave them in the comment section below. Thank you for watching.